Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month lead and tin.
LME 3-month lead. 11 weeks ago here, I said we had a choice of patterns, and I quote, "We have a possible choice of patterns here, or maybe even both patterns acting at the same time." Anyway, the first pattern is a possible mid-November 2022 to date head and shoulders top. This pattern is a little extended right now and is not as yet seen a significant break below the neckline. It's currently at 1976, which is highlighted in green, that is dark green, on my daily chart. Second pattern is a derivation and extension from this head and shoulders top. It utilizes the neckline as the lower trend line, plus an optimized upper trend line. That's currently at 1930. And it's highlighted in bright red to together make a possible descending wedge pattern, end of quote. I also added, and I quote, "Right away the optimization I've undertaken makes me suspicious about the veracity of this possible pattern. I'd rather say it and only look a fool now than have it confirmed later on," end of quote. The market exited out of this optimized descending wedge pattern back in mid-March on the upside and proceeded then to do, well, nothing. For a long while we did not have the moves higher for a descending wedge pattern or higher for the continuation head and shoulders pattern. What we have seen is a more or less sideways movement from late March through to the middle of May, with prices capped by layered resistances and sustained by layered supports. On the top side, we have had resistance from the overhead 50% Fibonacci line, the March 2020 to March 22 move at 2135. The declining medium moving average, currently 2110, and to a lesser extent by the declining short medium moving average, currently 2102. Add to this, the recent move below the flatlining long moving average, currently 2778, as well as Fibonacci and other congestion at 2058 and 2039. 2039 is the January 2020 high. Likewise below, we still have some layered support at 2021 and 2001. This last one, I thought last week was especially strong, as it seems to have been so. This is all before even touching the trend lines of the now broken descending wedge pattern, notably the lower trend line in dark green, currently at 1976. This past we have seen all those supports bar the lower trend line breached but not broken as yet. There has been since the start of May a drift towards moving lower, seeming accelerating in recent days. This was started by the move down below the long moving average, and it also seems to have started the construction of a possible bear channel, currently 1958 to 2061, which is highlighted in bright green on my daily chart. It is still early on this bear channel, but we seem to have enough to at least draw a bear channel. It will of course all depend on what the market does should it get down there once again at the congestion of Fibonacci support at 2001, and then the neckline below that makes up the lower trend line of descending wedge pattern highlighted in dark green. Overshadowing all of this is January's monthly key reversal down. LME 3-month tin. As I've previously mentioned countless times here, we have a series of stratified support and resistance levels that slow but do not halt the market's major moves. The significant ones were and still are at the following levels. Below the market at 25,250, then between 23,000 and 24,155, then at 21,360, and then between 24,35 to 25,10. Above the market we have the 2012 high at 25,875, then between 23,000 and 24,155, and then at 21,360, and then between 24,35 to 25,10. Now further up, we have the lesser Fibonacci line at 27,330, the July 2011 high at 29,010, and the lesser Fibonacci line at 3205, and finally a major resistance, the interesting 50% Fibonacci line of the March 2020 to March 22 move at 31,845. To all these that I'd previously added also the 50% Fibonacci line, the recent late October 2022 to late January 2023 move at 25,020. I've kept this one separate as the market last week gapped over it, and I'm keeping a close eye on it. Looking at the bigger picture, I said some 17 weeks ago that the 50% Fibonacci line at 31,845 would be the real test of any rally, and so it proved to be. As prices did not break up over this 50% Fibonacci line, but just breached it with one single close over it back in January before heading back down, gapping lower indeed. On its way down, the market hesitated in February, making a small bearish halfway hesitation, before fulfilling the pattern down at the 21,360 support. Since March, we've seen prices gradually move back up through congestion and resistances, but only peaking just short of the middle time, currently at 30,225, back in mid-April of the late October 2022 to mid-March 2023 bullish shift pitchfork, which is highlighted in dark blue on my daily chart. So, overall, the market has moved upwards in between the middle time overhead and the lower time below, currently 23,900, of this bullish shift pitchfork. However, the action since January's general shape prompted me 2 weeks ago to ask a simple question. Is this action since the height of January a possible, very large bearish halfway hesitation in the making? It is still too early to say for sure, plus we do have a lot of congestion both below and above the market. Now, I'd like to draw your attention to some of the moving averages. We have the flatlining medium moving average above, currently at 26,035, and the flatlining long moving average below, currently 23,950. This prompted me to draw over the last 2 weeks a bearish shift pitchfork for the whole of the 2023 action. This non-highlighted, bearish shift pitchfork has an upper time just above the market, currently at 26,015. And whilst I'm quite happy to retire this pitchfork at the merest hint of break, I would very much like to see it if it performs. You see, the upper time crosses the lower time of the bigger bullish shift pitchfork by the end of June. So something will have to give way before then, and perhaps soon.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.